Now, when it comes to the taxes, we have found, especially a lot very early in the conversations this year, that a lot of CPAs and accounting firms are just not familiar with the different deductions that you can take advantage of. And there are so many things as business owners, as investors, that we are able to do. There are things that some of these people that are listening right now that are clients of mine, they've been doing for years and years, where they may have children. And if you have children and if you have a business and if you've never paid your children, you need to have a conversation with the team or someone to find out why. Because most of our clients that have entities that have revenue that they're trying to deplete because they want to pay as little in taxes, like all of us, did you look at, do you have kids? Do you have grandkids? Did you actually know that you can incorporate them? And this year, Christy, they bumped it from 15,750 last year to $16,000. So now, again, I love to use these examples, especially in live, because I don't care. I'm an open book. I have 3 kids that are under 18 that I'm doing this with. So that is $48,000 for the Carlson family that I've taken from corporate capital, put into my family management company. And that $48,000, I can do whatever I want with it. And the best part about it is my kids don't have to file a return because they stayed under that threshold. And then at the same time, I can use that money however I want. So I know some of you are frustrated with your recent discovery or maybe what you think estimated tax is going to be this year, but did you do any of that? Quickly focusing on taxes, I've mentioned this before, but now that we're live, the Augusta rule. The Augusta rule is a really great opportunity for those of you who have businesses. And if you don't have a business, if you have a reason to create one, then we can still take advantage of some of these deductions. So the Augusta rule, just to touch on briefly, is it started in Augusta, Georgia, Christy. These really rich people were going to this tournament, the Masters. Everyone knows the Masters for the most part. They were spending $50, $60, $100,000. They were writing it all off. So the IRS said, okay, we'll compromise. 14 times a year, you can have a meeting at your home. So instead of going to Del Frisco's or the Empire State Building or Holiday Inn, what we've done as a company is we've called and gotten all the comps across the country. So on average, about $2,000 per meeting, where now your clients, myself, I've been doing it 8 years, can have these meetings 14 times at your home. And then every time you do it, you can compensate yourself. So again, if you are looking at a tax bill, some of this is too late to implement for last year. But like Christy said at the beginning of the call, maybe it is time to start looking at that and planning. So we don't like to talk to our clients in January or February for 2025. Any new client that we bring on board, we try to bring on board as early as possible. And the reason we do that, Christy, is we don't charge by the hour. So we just offer a flat rate for clients to say, hey, if you have an LLC or if you just have a personal return, here's the flat rate I've charged for 13 years. But with that, we don't want to just plug in numbers and then spit them a return. It's like a gym membership. For many years, I didn't go to the gym. Now I'm going and utilizing my membership. We have clients that call once a month, at least quarterly, to go over their numbers and say, hey, I'm projecting this amount. What do you think? And even though we don't do their books and accounting, we still will take the time as a tax client of ours to say, you should probably make an estimated tax payment of X amount of dollars.